You know, and lots of volatility on the micro level today. We're well off the highs. It'll be interesting to see whether we see the indexes finish higher or lower. And then, of course, we've had the rebound rally out of the May sell-off. But net, the S&P 500 up 15% this year. What do you think June is going to bring for us?
Well, it's difficult to say. The thing that's important to keep in mind now is there aren't a whole lot of upside catalysts. We know that President Trump is supposed to meet with President Xi here in a couple of weeks at the G20 summit, but to my knowledge, that meeting hasn't been officially scheduled yet. We're done with earnings season, as we spoke about last time I talked to you, and so we have kind of a vacuum, if you will, right now of news. So the market's kind of floating around today. Volatility is a little elevated, as you said, but for the most part, the market's just kind of not sure which direction it wants to go at the moment. So
when we bring oil into the picture, because of course today oil rallying on those tanker attacks in the Gulf, you know, it's kind of interesting because it seemed to give earlier a tailwind to stocks. If we continue to see oil climb, even as OPEC is saying demand is falling on trade tensions, do you think that that could give stocks a little bit of a tailwind, despite the fact that we wouldn't have sort of broader macro positives?
Well, it kind of depends on where oil ends up. What we do know is that conventional wisdom has always been that low oil was good for the markets. But then when oil got really low, like at the beginning of 2016, the markets got beat up pretty badly. So now we know that high oil and low oil, if it's too high or too low, are both bad. So I think if what oil needs to do is stay in the range of about 45 to 70 for West Texas. If it's in that range, it tends to be relatively neutral. Now, you will get occasional bumps like we got this morning when something unusual like what we saw happen with the attacks takes place. But generally, oil is driven a lot more by supply and demand. It does get impacted a little bit when the dollar moves. But for the most part, you can't draw direct correlation over anything more than just maybe a day or so with equity. So I wouldn't count on oil to be sort of the upside catalyst here.
OK, so let's bring bonds into the equation then. Sort of a similar relationship where sometimes when the yields go super low, if it's on the Fed or CBs, it really helps stocks. On the other hand, if it's, you know, on fear, what do you think bonds are telling us, and where do stock investors want the 10-year yield to be ideally?
Well, that's a good question. What we do know is that the 10-year the yield has gone lower than most people expected, and it's very low right now. We're talking about, you know, a multi-year low here. The thing about bonds is that what the markets, I think, are waiting for right now is what the Fed's going to say at the meeting. So and that's coming next week. The odds of the Fed hiking or cutting next week are very low. Maybe it's 20%, I think, on a cut. But the odds for July, on the other hand, are fairly high. They're up close to 80%. So I think what the markets are going to be watching when it comes to bonds is what does the Fed say? Because Jay Powell has a press conference at every meeting now about what he might do in July. I think almost no one's expecting a cut next week, but there's a pretty substantial likelihood, at least based on the futures markets, that we might get a cut in July. So that's what the markets are going to be watching when it comes to bonds.
Randy Frederick of Charles Schwab joining us from Austin, Texas. Great market conversation in the context of relatively subdued volatility. Let's see what it brings the next time we chat.